Friday's news that Israel was preparing to launch a full-scale ground operation in Palestine drew sharp criticism from nearly all countries in the Middle East. This heightened the risk of the conflict in the world's top oil-producing region, escalating further, which in turn triggered a sharp rise in oil prices. The rally was also fueled by some policymakers' calls to strike Iran's oil infrastructure. According to them, Iranian security officials were responsible for the Hamas attack. However, Israel postponed its ground offensive, which calmed markets and limited a bullish run in oil prices. However, if U.S. officials continue to make bellicose statements, oil prices will likely resume gains at an even faster pace. Last Friday, Brent crude added more than 5.5%. The asset rose above $90 per barrel, indicating a continued rise in speculative long positions. After all, news reports remain the key driving force for the oil market. All those factors contributing to higher oil prices had the same effect on gold. Over the past day, the asset gained more than 3.5%, thus entering overbought territory in the near term. As a result, the yellow metal pulled back, but market sentiment remained bullish. Fears of a wider conflict in the Middle East increased global risks, and investors continued to flee to safe haven assets. Against this background, gold prices jumped above $1,900 per troy ounce. Given that risks persist, this trend is likely to continue. Now let's move on the ruble. Since Friday, it has been trading in the range of 97 to 98. Indicating uncertainty among market participants, and this sideways move may cause new speculative swings, with the exchange rate going beyond the range boundaries. Notably, at the time of preparing this material, the ruble was seen trying to gain ground. Given that there are no details regarding the recent tightening of currency controls, the Russian currency may well resume losses. And the list of companies subject to these measures will probably be classified so that Western countries do not step up sanctions against them. Besides, technical details such as the volume of terms of a mandatory sale of foreign currency earnings are unknown, and thus this step may have no effect. Apparently, the dollar gradually will come back to the 100 mark. Today, however, Economy Minister Maxim Reshetnikov has presented an updated macro forecast, noting that the equilibrium ruble rate is seen at 90 and 92 per dollar in 2024 and 2026. Perhaps this will support the Russian currency. And that's all for now. We continue to follow developments in the financial markets. Subscribe to our channel and follow the news with us, and see you soon.